Welcome to our channel. Today, we'll delve into the insightful views of Warren Buffett and Charlie Munger on investments, unraveling strategies and profound reflections. Discover how Buffett found pleasure in the investment game, explore Munger's critique of the costs of higher education in the US, and anticipate their optimistic analyses on the future of China. Uncover secrets of success and gain valuable insights. Don't miss out, subscribe now to stay tuned into discussions on Warren Buffett's investment strategy. You won't want to miss it.
1. Munger expresses optimism about the future of China, praising the country's progress and crediting leaders like Lee Kuan Yew for addressing corruption. Both Buffett and Munger acknowledge China's remarkable transformation and predict that China and the US will be the dominant superpowers. Charlie Munger, eminently insightful in his analyses, projects an optimistic outlook for the future of the People's Republic of China. His admiration for China's progress and his praises for leaders, notably Lee Kuan Yew, reveal a keen appreciation for the driving forces that propelled the country's remarkable advancement. By highlighting the effective confrontation of corruption as a key to success, Munger underscores his view that ethical governance plays a crucial role in the rise of a nation. The respected investor, along with Warren Buffett, shares the perception that China's extraordinary transformation puts it on the path to becoming one of the preeminent superpowers alongside the United States. Recognizing the remarkable achievements, the investor duo envisions a geopolitical reality where China and the US emerge as dominant forces. This forecast, based on meticulous analysis of economic and political trends, highlights the importance of understanding international dynamics to inform global investment strategies. Munger's emphasis on the effectiveness of anti-corruption policies and visionary leadership aligns with a broader narrative about the complexities of economic and political development. His optimism is not just a projection about Chinese growth but also a manifestation of his belief in the positive impact of ethical government practices on a country's long-term sustainability. Rooted in thorough analysis, these observations invite investors to consider not only numbers but also the ethical fundamentals that shape the global landscape. Ultimately, Munger's words about the future of China not only reflect his confidence in the economic prospects of the country but also underscore the importance of ethical and political factors in determining a nation's enduring success on the world stage. By offering a balanced view that transcends the financial realm, Munger reinforces the need for comprehensive analysis to inform investment decisions in an ever-evolving global context.
2. The discussion shifts to the rising costs of higher education in the US, with Munger criticizing the notion that individuals with a university education inherently fare better and pointing out issues in the educational system. The theme of the discussion transitions to the high costs of higher education in the United States, where Charlie Munger emerges as an insightful critic. Munger, notable for his pragmatic approach, casts a critical eye on the premise that individuals with a university education, by inherent nature, achieve financial success. His critique, grounded in careful analysis, highlights the need for a more comprehensive evaluation, questioning the validity of the correlation between possessing a degree and economic success. The veteran investor Munger does not limit himself to pinpoint criticism, extending his scrutiny to the educational system itself. His remarks reveal a deep concern about the effectiveness of the system, highlighting inherent flaws and challenges. Asserting that university education alone is not a guarantee of prosperity, Munger prompts reflection on educational gaps and the urgent need for substantial reforms in the system to prepare individuals more comprehensively. Munger, a respected figure for his insight, instigates a deeper analysis of the purposes and outcomes of investment in higher education. His critique is not just a denouncement of rising costs but a call to action to rethink the educational model and its promises. In a scenario where educational expenses are increasing, Munger's words resonate as a warning for a critical review of the status quo, aiming for the creation of an educational system more aligned with the real needs and expectations of society. By challenging the conventional idea that university education is the only path to success, Munger contributes not only to the debate on costs but also to a broader reflection on the transformative role and effectiveness of the educational system. His impassioned observations not only question the present but also point to a future where the quality and accessibility of higher education are reconsidered and redefined for the sake of progress and educational development.
3. Charlie Munger adds that investing is an easy game for those with the right temperament and interest but expresses reluctance to be an example for those seeking wealth only through shrewd stock picking. Charlie Munger, a prominent partner of Warren Buffett and influential figure in the world of investments, enriches the discussion by stating that the act of investing can be compared to a relatively easy game for individuals endowed with the right temperament and a genuine interest in the subject. However, his measured approach reveals palpable reluctance to become an exemplary model for those aspiring to prosperity solely through astute stock selection. Munger, known for his sagacity and pragmatism, emphasizes the need for a more comprehensive and strategic approach in the realm of investments, cautioning against the dangers of an overly simplistic view. Munger emphasizes that, when entering the complex world of investments, it is imperative to understand that success does not solely rest on clever asset selection. His reflective stance reinforces the importance of considering macroeconomic factors, market trends, and, above all, the development of a long-term vision. This more holistic approach, according to Munger, not only provides a deeper understanding of the financial market but also contributes to the construction of resilient investment strategies. Munger's hesitation to serve as an example for those seeking quick enrichment highlights his conviction in the need for an investment journey grounded in solid principles and sustainable practices. His skepticism toward a simplistic approach reflects a sophisticated understanding of the inherent complexity in financial markets, where the pursuit of wealth requires constant diligence, patience, and a holistic understanding of the dynamics at play. In this context, Munger's contribution goes beyond mere financial wisdom, serving as a poignant reminder that wise investment is not a search for shortcuts but rather a journey of continuous learning, temperance, and strategic vision.
4. He emphasizes the pleasure he found in the investment game and the importance of having a guiding philosophy, which he found in Benjamin Graham's book, The Intelligent Investor. Warren Buffett, an icon in the world of investments, highlights the source of his early success by emphasizing the intrinsic pleasure he found in the intricate game of investing. Additionally, the mogul underscores the essentiality of adopting a guiding philosophy, revealing that his intellectual compass was forged by the pages of the seminal work, The Intelligent Investor, written by Benjamin Graham. This narrative reveals not only the inherent enjoyment in the process of investing but also the critical importance of a solid philosophical approach in formulating enduring strategies. As we delve into Buffett's journey, we observe that his success is not limited to mere acquisition of knowledge but rather the masterful fusion of pleasure and purpose, coupled with wisdom imbued by fundamental principles. The perceived pleasure in the investment game alone is not sufficient. The development and adoption of a philosophy that resonates with effective values and strategies are the essential gears driving the engine of his financial decisions. Charlie Munger, Buffett's longtime collaborator, enters the conversation, adding an additional perspective. Munger highlights that, for those with the necessary mindset and intrinsic interest, investment presents itself as a reasonably accessible game. However, he shares reservations about being an example for those seeking enrichment solely through shrewd asset selection, underlining the need for a comprehensive and strategic approach. The discussion then transitions to the sphere of the escalating costs of higher education in the United States, where Munger questions the assumption that possessing a college degree alone guarantees financial success. He points out flaws in the educational system, inciting a profound reflection on the validity of investments in this sector. Munger concludes the dialogue expressing optimism about the future of China and acknowledging the country's efforts to combat corruption and foster significant advancements in its economic trajectory.
5. Warren Buffett attributes his early success with small amounts of capital to having a great mentor, exceptional focus, and the right emotional qualities for investing. Warren Buffett, one of the world's most renowned investors, attributes his early success with small amounts of capital to a unique combination of determining factors. This includes the presence of an exemplary mentor, mastery of exceptional focus, and possessing crucial emotional qualities to navigate the challenges of the investment world. The investment mogul emphasizes the importance of the pleasure he found in the investment game and the significance of adopting a guiding philosophy. His journey to success took a new turn upon discovering the lessons of Benjamin Graham in the iconic book, The Intelligent Investor. Recognizing the need for a solid philosophical foundation further fueled the enjoyment in the investment game. Charlie Munger, Buffett's longtime partner, adds to the discussion by highlighting that for those with the right temperament and intrinsic interest, investing is a relatively easy game. However, he expresses reservations about becoming an example for those seeking wealth solely through astute stock selection, emphasizing the need for a more comprehensive and strategic approach. The conversation then shifts to the realm of rising costs of higher education in the United States, where Munger criticizes the notion that individuals with a college education alone achieve financial success. He points out flaws in the educational system and prompts reflection on the effectiveness of investment in this sector. Munger concludes the discussion by expressing optimism about the future of China and highlighting the country's efforts to overcome corruption and promote significant advancements.
We conclude our journey through the world of investments with valuable insights from Warren Buffett and Charlie Munger. If these reflections have piqued your interest and provided a new perspective on financial strategies, be sure to subscribe to the channel to continue receiving exclusive content. Leave a like if you enjoyed the analyses and share your thoughts in the comments. Together, we build a community of learning and financial growth. Let's enrich our minds and strengthen our investment portfolios. Subscribe, like, and comment. Your engagement is crucial. Until next time, investors.